Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup. And the setup as of now is absolutely muted as far as the SGX Nifty is concerned. It's moved into the positive territory, but absolutely flat as flat can be. So that's the view that's coming in on the SGX Nifty. How did the ADRs pan out? Except for IT, most of the other ADRs were down in trade. ICICI, Tata Motors, Vedanta, HDFC Bank, all of them having cuts of close to 1 to 1.5%. What did do well was Infosys and Wipro, which moved up 1.5 to 2% ahead of the TCS numbers. And yesterday also, Nifty IT was one of the best performing indices in trade. As far as crude is concerned, it opened muted after 3 days of rallied. Overnight, it did rally 1%. So we are seeing that there is a lot of traction that's coming in. WTI hit a high of almost 63.67. Brent is trading close to $70 barrel per mark. So there is enough traction that's happening. Stockpiles have actually fallen significantly, and that is keeping oil at a 3-year high. As far as commodities are concerned, on the LME, it was a strong close. Look at the commodities that have come out. So from aluminium to zinc, both of them, aluminium as well as nickel, both of them gained over 1%. The other commodities managed to end in the positive territory. COMEX copper is trading with a positive bias currently. As far as the Chinese market are concerned, the traction is pretty strong in the Chinese market. Most of the commodities in China have opened with a positive bias. So aluminium is up, steel is up, copper is up, rubber is now trading with a positive bias. So there's enough traction that's happening as far as the commodity market is concerned. Gold is trading with gains for the second straight session, so there is traction that's happening there. As far as fund flows are concerned, FIs were net sellers, but on a month-to-date basis, they have been aggressive buyers. DIs were net buyers to the tune of 600 crores, and that has got down the net sell figure on a month-to-date basis to just 20 crores. As far as the Nifty was concerned, clearly there was traction that was seen on the Nifty, but Nifty IT was the best performing index. It was up almost 2%. On the metal front, it closed in the positive territory, but in the 7 out of the 8 session, the Nifty Metal Index has actually closed with positive bias. That's not the case with the PSU Bank Index. It closed down 1.4%, and it's actually fallen 7 out of the last 8 sessions in this year itself. So there is enough negativity that's happening. Nifty was down almost 4 points, but what contributed on the positive side? No doubt all the top 4 were the IT stocks. Little bit of weakness that was seen on the banking side and the capital goods side. But Agam, what are the FNOQs indicating? And a word on the IT stocks.
Absolutely, Darshan. It's as you already pointed out, it is the IT stocks that has led the Nifty upwards, or at least kept it buoyant to a certain extent, which is why the Nifty closed flat in yesterday's day of trade. But as far as the open interest goes, we did see a little more accumulation there. When it comes to the Nifty Bank futures, we have seen unwinding of as much as well over 8%, despite the fact that, again, we didn't see too much in terms of cues for the underlying index itself. But the WIX has moved up slightly, inched again back above the mark of 14, and the put call ratio also largely around the same levels at around 1.65. Now, in terms of changes in open interest, what we've seen is a little more writing in the 10,500 and the 10,600 puts, and that trend continues. This is an extension of what we've seen over the previous couple of days as well. And well, 10,700 is now starting to look at a little more accumulation, which means we're expecting a range-bound day of trade at least before we start seeing the big earnings come in. That said, in terms of changes in the FNO band, we have Jet Airways and Reliance Power enter, and JSPL moves out of the FNO band, so we could see normal trade there. And of course, 2 other stocks that I do want to mention, we have NIT Tech, which has seen a substantial amount of fresh longs building in. On the other hand, Page Industries looking at a lot of weakness on the back of near 20% added in open interest, so some weakness coming in there. So these are some of the stocks that I'll be watching out for. Of course, IndusInd Bank and TCS on the back of earnings, and whether or not the Nifty can hold on to these levels as we move into today's day of trade.
For more on this unprecedented action by SEBI, I'm joined by Menaka Doshi. Menaka, 9 years it's taken.
Well, it has, and at the end of 9 years, and the order explains why it's taken so long, because there are several parallel investigations going on, including criminal investigations. We have an unprecedented order, Alex, as you've pointed out, one that, for the first time, at least in my memory, has SEBI, the Markets and Securities Regulator, barring an audit firm from being able to issue audit certificates for a 2-year period. And it isn't just any one firm of the Waterhouse network. All the firms that share the brand of Price Waterhouse have been barred from doing so. So therefore, this is unprecedented. We have never seen SEBI take action like this before. But then again, the Satyam scam was an unprecedented one as well. Now, let me give you some details of on what grounds SEBI decided to do this. So there were 5 charges, if I may call them that, on the basis of which SEBI examined the actions and the behavior of Price Waterhouse and the partners that you've mentioned. For instance, the first one had to do with non-existent cash and bank balances of a little over 5,000 crore rupees. And in this, SEBI has gone to great detail to show that no external confirmations were sought in order to verify these cash and bank balances. And in fact, in several instances, SEBI has also depicted in its order that, there were deferring balances available based on what the banks told the auditor and based on the information that the company offered the auditor, and yet the auditor was not alarmed enough to investigate or verify this independently. So as you can see, the quote we put up from the order on the screen says that the auditors ignored the first set of confirmations received directly from the banks, relied exclusively on those received from the company, showing deposit balances which were tallying with what was shown in the books. The second charge had to do with inflated sales revenues using a little over 7,500 fake invoices. Here again, SEBI has found that Price Waterhouse, the firms involved in the audit, as well as the partners, failed to do enough verification. So they failed to walk through tests in respect of the invoices. They did not take all the internal control measures that were required. They chose to ignore internal audit reports. They relied on ledger entries, and they did not conduct the audit as maintained or mandated by accounting standards and the guidance note that accompanies that. On the third charge, or the third ground, it has to do with overstated debtors position by hundreds of crore of rupees. SEBI again found that Price Waterhouse did not do adequate external confirmation of debtor balances, which in turn resulted in it failing to notice the inflated and false figures concerning Satyam. SCSL in the graphic plate refers to Satyam Computer Services. There were 2 other charges. One had to do with a variance in the TDS benefits that were claimed and that were shown in the books. In that, SEBI said that, it was not fully convinced that, the TDS variance was easily identifiable by the auditors. And therefore, they have said that I would, of the view that the charge contained in the show cause notice, SSCN is that, against the notices concerning TDS is not sustainable. And similarly, in the 5th charge, which had to do with failure to detect receipts of about 1,400 crore rupees, SEBI did not find enough ground to be able to maintain the charge. Now, these were the 5 specific grounds on the basis of which SEBI investigated the behavior of PW or its work as the auditor of Satyam. And in summary, this is what SEBI has found. Gaping holes in the auditing process followed by the auditors. The attitude of professional skepticism was missing. That, in fact, they also ignored a whistleblower letter that was received by an independent director on December 23rd of 2008, just a few days before Ramalinga Raju, in fact, confessed to his crimes. And they said that, the independent director had asked the auditor to investigate this whistleblower's letter, but no action was taken. Thereafter, SEBI says there has been total abdication by the auditors of their duty to follow the minimum standards of diligence and care expected from a statutory auditor. And it goes on to say that therefore it has come to a satisfactory conclusion as to the culpability of the auditors. And it is stated that mens rea in the criminal sense of the term is not relevant to be established in a violation alleged under SEBI, read with the applicable provisions. The reason I'm quoting mens rea here is because in their argument and in their defense, SEBI and the 2 individual partners had argued that there was not enough evidence to show that there was actual specific involvement on their part. And so therefore, SEBI has argued that I don't need to show specific instances of mens rea, that in fact this all-round abdication of duty is enough for me to find that you were possibly involved in the fraud, and that's on the basis of which SEBI has taken the action that it has. Alex?
Menaka, you mentioned right at the start that this is unprecedented because of the fact that the Satyam audit was tasked to 2 member firms and 2 partners. So, but the entire network firms have been punished in this manner. But is there any rationale as to why that has happened?
Yes, I think SEBI has again gone to great lengths to establish how the Price Waterhouse network functions, how they have common resource agreements, and how all these network firms in India are linked to each other. They've also pointed out in their order that the Satyam engagement letter in appointing the auditors is signed only as Price Waterhouse and not by a specific firm in either Calcutta or Bangalore. Those were the 2 specific firms, in fact, that were involved in the audit of Satyam. But they have not curtailed the action only against those 2 firms and those 2 specific partners. They've taken action against all of the Price Waterhouse network firms on the basis that these are all linked to each other. They've also noted the action that SEC and the PCAOB, the super regulator, audit regulator in the U.S., took against Price Waterhouse, and they've said that SEC and PCAOB also note systemic problems in the audit processes carried out by Price Waterhouse entities, and therefore it's difficult not to take note of the loss of faith of investors in the brand name itself, which is why SEBI felt compelled to take action against the entire network of firms and not just 2 specific firms or 2 specific partners. The Price Waterhouse entity of firms, a group of firms, had argued vehemently, as the order points out, that there was no reason to punish other audit members and other chartered accountants employed by their firms, because of the potential failings of 2, even though they've argued that nobody has failed or there was no culpability or involvement. But SEBI has not bought into that and therefore has taken action against the entire network of firms. And as you pointed out right in your introduction, the entire network of firms, all the firms sharing the Price Waterhouse brand name, now stand barred from being able to issue an audit certificate or a compliance certificate to any listed company or intermediary for the period of the next 2 years. Equally important is the disgorgement order. The disgorgement is of about 13 crore rupees right now, specifically to be paid by Price Waterhouse Bangalore and the 2 partners involved. But it's not just 13 crores because, as you pointed out, it's to be paid at the rate of 12% interest right from 2009 onwards. So that works out a sizable amount. I'm sorry, my mental math is not very good early this morning, but I'm sure someone who does the calculation can figure out that this is a fairly large amount that they've asked for disgorgement, and this is based on the fees that were paid for that specific audit service.
On to the stock of the day, Som Distilleries and Breweries. This is one counter which is going to be an interesting stock to watch out for the day. EQ India Fund, Poranju has bought in 1.8% stake in the company at 9.8 crores. Separately also it has bought in another 0.5% stake in the company at around 2.96 crore. A total of 2.3% stake is what Poranju has got into the company. If you look at the shareholding pattern back in September 2017, the promoters hold as much as 23% stake in the company. That's relatively low holding, and the public shareholding stands at 77%. But if you look at the financials of this company, it's a pretty picture. If you look at FY17 numbers, now sales in terms of top line, the company has delivered a 200 plus kind of growth, and in the first half of the financial year, it's already done with 183 odd crore, and it's also targeting to do a 300 odd crore by March 2018. If you look at the operating performance of 35 crore in FY17, almost that has almost been done. It's been taken care in the first half of the financial year. Net profit also is to the tune of the financial year just in the first half of this financial year. Now, if you look about just to give you a rundown of what the company is, well, it's a liquor manufacturer with a market capitalization of around 650 odd crore, and also the company has been embarking upon very aggressive expansion plans, be it in terms of expanding in existing geographies like Karnataka or foraying into a new geography which is Maharashtra, which the company plans to do in a span of next 3 to 4 months.
Well, talking about Indian rupee, it snapped its two-day losing streak yesterday and ended 12 paise higher at 63.60 levels against the dollar. Now, it was quite a volatile day for the forex market as the sentiments initially turned negative on the back of strengthening dollar and rising crude oil prices overseas. However, a record rally in the local equities on hopes of more foreign inflows largely supported the rupee's big move. So, however, traders do remain cautious ahead of the release of industrial production and consumer price numbers, which is scheduled for tomorrow. On the global front, Asian currencies were trading higher on the back of dollar weakness after Bloomberg reported that China is ready to halt or slow down its US Treasury purchases, thereby fueling expectations that the world's largest foreign exchange reserve holder may shift to other emerging market currencies. Now, coming back home, dollar rupee is trading at 63.77 levels against the dollar in the non-deliverable forward market, which indicates a weaker opening for Indian rupee in today's trade. Moving on to bond market, sovereign bonds declined yesterday for the third straight session on concerns of rising crude oil prices and higher US yields, while the 10-year Treasury yields ended 7 basis points higher at 7.44%, which is its highest close since the issue of security in May 2017. While global funds increased their rupee debt holdings for the third consecutive session yesterday, they infused close to 2,800 crore, according to NSDL data. Well, that said, let's shift focus to commodities market. Good morning, Jayesh. Dollar weakness has definitely helped gold shine. So what are your thoughts on it?
Definitely, Saloni. But let's start with crude oil prices, which have actually surged 1% overnight after a 2% surge that we saw day before. Now, this is backed by inventory data that has come out from the US. So EIA has reported an inventory decline of as much as 5 million barrels for last week. Now remember that this is the biggest drawdown that the country has seen since 2014. Now based on this, Citi has revised their oil target price upwards to as much as $80 per barrel. As far as industrial metals are concerned, most of the metals closed higher on the London Metal Exchange. The index itself posted a gain of about 0.8%. As far as individual base metals are concerned, nickel was the top gainer, which was up about 2% and reached the highest level since 2015. Aluminium snapped its 3-day losing streak and gained about 1.5%. Copper, lead and tin also advanced on the LME, while zinc was the only base metal to close flat in trade. As far as Shanghai base metals are concerned, we are seeing that most of these base metals have started trading on a positive note. As Saloni was mentioning about gold prices being boosted by the dollar weakness, we are seeing gold at a 3-month high, and also that the Chinese officials have now said that they will recommend slowing or halting of US Treasury purchases going forward.
Amongst the stocks that we're tracking today morning is Maruti, which has hiked the prices of various models by up to 17,000 rupees, reflecting higher input costs. We're also tracking HDFC Limited, where they have said that the board will meet on 13 January to consider the details of QIP and preferential issue. I remember back in December, the board had approved fundraising of up to 13,000 crores, so do keep an eye out on that name. We're also tracking Welspun Enterprises. Now they have entered into a concession pact with the Madhya Pradesh government for a project whose cost has been estimated at about 118 crores. So keep an eye out for that name as well. Also a couple of reports in newspapers today on the back of which we do expect stocks to react. One is Jagajit Industries. Now this is an ET report which says that the company will refinance debt of about 265 crores. It's a smaller name, but you could see some reaction, positive reaction there. You also have a report on the ET on Balasore Alloys, and they've said that they're looking to acquire 70% stake in Zimbabwe Alloys, so keep an eye out on that name as well. We're also tracking GMR Infra, again a ET report which says that the company is set to raise up to 5,000 crores via an airport business IPO. That's been ongoing, but let's see how that reacts in trade as well. Canara Bank is Canfin Homes is another one. TPG, Bain and Baring are in talks for the bank's stake in Canfin Homes. This is a ET report again, so do watch out for Canfin Homes as well. Dredging Corp, now a report says that the shipping ministry has built a case against the company's disinvestment. The stock has run up significantly, so let's see how that reacts today. On Welspun India, on the back of bulk deals, DSP BlackRock has bought 3.7% stake yesterday, even as the promoter sold 4.8% stake. So do watch out for that name. And lastly, Ujjivan Financial Services, where UK-based CDC Group has sold 1.9% stake. With this stake sale, they have completely exited Ujjivan Financial Services. And last, they had sold stake in August or September at an average price of about 360. So do watch out for that name as well. So these are some of the stocks you need to track and trade today.
So as per the circular issued by the Unique Identification Authority of India, a virtual ID now can be used against the original Aadhaar number at the time of authentication for availing various services and welfare scheme. Now, virtual ID is nothing but a temporary revocable 16-digit number mapped to your Aadhaar number. A citizen has to generate its own VID. Once a VID is generated, a token will also be issued, which will be stored by the system to double check the credentials of the VID. Now, a user can generate multiple VIDs, but once you generate a new one, it will cancel out the previous VIDs. You can also set a validity of your VID. Post that, you have to again generate a new VID. Now, UID in its circular also said that it will limit the number of agencies that will have access to your Aadhaar data and biometric IDs. And for that, it has set two categories. One is local and one is global. While the global authentication agencies will be able to access and store your Aadhaar number and data, local agencies will be allowed to only store your virtual IDs, and to double check your virtual IDs, they will use the token that was generated at the time of issuing the VID to double check the credentials of the person who was given the VID.
Well, when it comes to the expectations from TCS third quarter, we're expecting a subdued one because of furloughs, and hence the seasonality factor comes and starts playing out. In terms of expectations, we are expecting revenues to move up as much as 1.7%. Margins are expected to remain largely flattish at around 25.3% as against 25.1%, with profits expected to grow as much as 1.4% at a little over 6,550 crores sequentially. Now, in terms of factors behind expectations, as I've already mentioned, that it is the furloughs that is going to play a part, which could lead to subdued growth. But we could see very little impact of the cross-currency movements on margins. And moreover, we could also expect some strong deal signings in quarter three, the impact of which could be seen in the subsequent quarters. That said, what are we watching out for? So Accenture came out with a good earnings, in November, and that has indicated a gradual recovery in the US markets and the BFSI vertical. So we'll be watching out for commentary from the management. And that said, of course, so we'll also be keeping an eye on what the management has to say with respect to client budgets and spending trends. But on the whole, we're expecting a quiet quarter from TCS.
Well, as far as IndusInd Bank earnings are concerned, the consistent earnings growth trajectory is expected to continue this quarter as well. In terms of the key estimates, the net interest income is expected to grow by 22.6% on account of a higher base. You also have net profit, which is expected to grow at about 23.5% to 927 crores. Our net interest margins are expected to remain steady at 4%. Loan growth is seen at about 24 to 25%, while asset quality is expected to remain steady. The gross NPA number is expected to come in around 1.1% or so, and divergence, if any, from the RBI will be reported this quarter. Nevertheless, not a very big concern as far as IndusInd Bank is concerned. But broadly, what the street will be watching out for is going to be the commentary on the progress on integration with Bharat Financial, any divergence that could be reported. Also, continued market share gains in vehicle finance and traction in the non-vehicle finance consumer lending portfolio will be keenly watched, as is going to be the traction in the CASA ratios. But overall, no surprises really expected. Should be a steady quarter from IndusInd Bank. And with that, it's a wrap on this show. Indian Open is up next. Stay tuned.